Hello everyone, this is Mark Leibovitz at the VR Gold Letter, and we're going to do a series of two videos this evening. We're going to cover the core portfolio and the aggressive portfolio, and of course highlights from those portfolios here instead of doing our weekly letter. On the screen you're looking at Palladium. This is the ETFS Physical Palladium ETF, and as you can see here on the monthly chart, and I can put on the daily chart for you as well, we're on a new high touching intraday 88.42. Trades a little bit of a discount from Palladium itself, which is now trading over $900 an ounce. As you know, I had been predicting a move to 900 or higher. Interestingly, here I'm going to put up the Palladium forecast I had for the year. This is what we put out in the beginning of the year as part of our annual forecast model report, which you have to purchase separately at vrtrader.com. But the Palladium forecast was created back here in January, February, and it showed an uptrend pretty much most of the year, but it said as we approach this August and September time frame, we could be topping out here, and there's a potential for a significant sell-off in Palladium. I'm not saying for sure that's going to happen. We're going to wait for some signs here, but we were calling for a buy in Palladium in the 700s. It's already over 900 an ounce in the spot market, so I'm not a bear, but I'm keeping my wits about me here at current levels. Let's look at GDX, which is the Market Vectors gold miners, and we're looking at a monthly chart here showing again positive VR and a little rising stochastic. Obviously this is not a bull trend, but seasonality suggests that gold and gold shares will put up the gold seasonality for you in a moment. But bottom line is, here it is, gold seasonality, courtesy of my friends at Equity Clock. This is based on a 20-year study. Basically, as you probably already know, in the July-August period, you tend to hit a low in gold, and it tends to rally more or less into the February time frame, into, in this case, February 2015. But showing some accumulation. Don't know if this is the beginning of a move that can carry it up toward that 50-month moving average, which is way up here in the low 40s. GDXJ, which is the Market Vectors junior play for the junior shares, also a positive ER a couple months ago, showing a basing pattern. 50-month moving average well above the market. You have a rising stochastic here, so that's interesting. Looking at Newmont Mining, just to give you perspective, individual stock, obviously very cheap. It's down from the 70s all the way down to the 20s, starting to turn higher. Positive ER, rising stochastic. So, the bet is that it's going to trade higher. Whether it's going to be a significant move or not, that I can't say. I believe Goldman Sachs has come out with a buy recently, last month or so, positive comments on American Barrick. Similar pattern, positive ER a couple months ago, rising stochastic, way oversold. Again, we're long this in our long-term portfolio. Gold, which is Rand Gold, this is considered a bit of a blue chip, showing relative strength compared to the other gold shares. As you can see, it's already up and touched its 50-month moving average. Stochastic already flattening out, but it's already made a nice move, and still it's sort of a blue chip in the sector. So if we're looking for a seasonal move, then you would certainly want to stay with GOLD. SWHC, which is the gunplay that we've been having on our list of Smith & Wesson for quite some time, hit our target. We're out of this, by the way. We had a 17 target. It got almost near to 18, and it generated a negative volume pattern here last month, and there was a negative earnings report in the company. But just to update you, if you looked at the newsletter, we had a 17 target, and the stock more than fulfilled that, so we're out. We also sold UPL, Ultra Petroleum, UPL. We had a target in the 28.30 area, got as high as almost at 32, and we've been in this for several months, so you should be out of UPL. It shows a negative volume pattern last month, started to come off here a little bit. I'm not saying it's going into a bear market, but it fulfilled our expectations on a trade. Let's look at FNV, which is one of the, I guess, sort of blue chips in the sector. The Franco-Nevada, where this is more or less, they're not a miner, they share in revenue by funding mining companies. As you can see, tremendous performance here. This is a monthly chart. The high in stock here was back in October 2012. Pretty much got back to the high, even though gold and silver and the mining stocks not anywhere near their highs. Look what Franco-Nevada did, FNV. We're still long this on a recommended list. Might as well stick with it based on the seasonality in gold and so forth. But this has been a real stellar performer. Let's look at natural gas, UNG, which is also on our core portfolio. This is a monthly chart, and it's sort of tough to gauge, the perspective here unless I really try to blow this thing up. Where you go back, way back here. Let's see here. You want to go way back. Well, this is back to July 2008. I mean, you're looking at the equivalent of $479 a share for United States natural gas. But here it is, having come all the way down, as you know, getting down to the 16, 17 area, rallied up to the 17 area. Now it's back to 21, 22. We're long this at vrtrader.com as well. I just think it's a good intermediate play for catch up in the natural gas market. This is a weekly chart on it, just to give you a little bit of perspective there. It's coming off of a bottom, so we're staying with our U.S. natural gas. So I'm scanning the list here as we're talking. One of our core holdings is GGN, which is the Gabelli Natural Resource Closed-End Fund. This pays about a 10% dividend, and I really like this. I've been trading this for years. I reinvest the dividends because, for 10% return, ultimately the stock costs you nothing. Stock got down to about 8.75, got up to about $11. It's really cheap. If you go back on this one, we have to go way back on this one here. It was back in the 30s. This is going back to 2008, and it dropped all the way down about $8, and now it's starting to recover again, getting up to about the 11.10 area. So again, this strategy, it's interesting. Closed-end fund. They basically sell call options on natural resource and gold shares and generating an income. But as the shares move higher and the market gets more bullish, the premium is greater on the option sales and the return could be higher. So in theory, return could be 15 or 20% in the stock down the road if indeed the premiums get greater. Of course, I think by then the stock would appreciate it a bit, so I don't know if you'll get exactly those returns, but definitely it's certainly worth looking at. And that's it. We'll get back to you on our aggressive portfolio in the next video. Thank you.